Hello,
John?
this is John.
Hey, it's Dave Cotter. Sandy over at CPX told me to give you a call, mention you might be looking to buy a building.
Hi, Dave. Thanks for calling.
Yeah, no. Did I catch you a good time? I know you're probably busy.
Yeah, I got a minute.
Okay, great. So just to start off, I just wanted to get some of your information, so I make sure I have you in here, and then we can kind of dive into it if that's okay.
Sure.
So John Franks, right? And then I think the company's Auto Parts Company. Is that sound right?
That's correct.
Okay. Have the number, and then I think your email is jfranks@autopartsco.com. Is that right?
That's correct. Yes.
Okay, and you're at 3124 North Fawn, FAUN
Mm-hmm.
Street, Phoenix 85254.
Correct.
Perfect. Okay, great. So do you know any chance you know how much you need to borrow at all?
I don't know how much can I borrow. We aren't even under contract yet, so there's a lot of questions I have too.
Got it. Do you know what I guess if you're not under contract yet, then, I guess what we can talk about is that, if you have some sort of estimation of what you think you're going to be buying. Do you have any idea?
Yeah. So because we're not under contract, I believe it's going to be about 2 million. That's what I'm anticipating.
Got it. That makes sense. Any TIs to the property, meaning tenant improvements, like improvements to the property you might put in there when you move into it?
Yeah, we're thinking about 250,000 just from our perspective.
Okay, great. And so that will be what for, like, some of the parking lot and, building out, some walls and things like that?
Correct. Yep.
Okay.
Exactly.
All right. Basically, we're just going to walk through a little bit of, you having some options, okay, as it pertains to, conventional versus SBA. Those are two things. Are you familiar with that at all?
Somewhat, yes.
Okay. So, let me walk you through a little bit of the distinction between SBA versus conventional. Okay. So with the SBA, there's two different types of loans. One is called a 7A loan, and the other one is a 504. Both of them you can borrow probably about 90% of the purchase price or the total cost.
I see.
The 7A is one loan that the lender lends. The bank will lend 100, the 90%. They get a guarantee from the SBA up to 75%. That's, why they do these loans. And then what'll happen is could be floating, could be fixed for 5, 10, 15 years, sometimes even 25. There is a prepayment penalty, which is a 531. So a 5-year first year, 3%, and then 1% in the third year. They take probably about 90 days, 70 to 90 days, just depends. Things are taking a lot longer right now. And there's some fees that you just need to be aware of, which it costs probably anywhere from 2.5% to 3% in fees, just junk fees that are going to be a part of that, process. So you can borrow, 90% on those, and then for the 504 is 2 loans. The bank will fund the first, which is 50%, and the CDC, which is the Certified Development Corporation, they'll actually fund 40%, which gets you to the total of 90. They'll fix it for 25 years, and the rates are pretty low. The 7A I was just talking about, they'll actually put a lien on your house, which some people get a little bit icky about if you have equity in there, and the 504 does not. So it just kind of depends on which one you want to do. Conventionally, you have to put down about 20% for a conventional loan, and do a 20, 25-year amortization, fixed for 10 years. So does that make sense? Is any questions around that at all?
No, I really appreciate that. I wasn't aware of the lien on the house,
Yeah.
so that's really interesting.
Yeah, no, that is definitely the case. Do you know where the down payment will be coming from? Like, do you have cash or any?
Yeah, we have some cash generated by our current business, but also just in savings.
Okay, great. Just back to the listener. So it's important to note how many times the client really has no idea. They don't know how much they need to borrow. And you need to encourage them to figure out with their broker also if, if there's a contractor. So if they're going to build something, they need to get to a contractor soon. Otherwise, this can be really problematic if they don't have a really good idea of the budget and for the contract. And the reason that the appraiser needs to get this is to get a true value. If they're guessing and the budget comes in higher, then they might have a valuation issue. Value comes in lower than the purchase price, plus their construction to build out budget, they may have to put more money down. So sometimes they don't have to do any builds outs to the building. They could just move in. So it's important in these sections to really get a gauge and then encourage the client to get to a contractor and get some idea pretty fast. As well, obviously, they're going to look to us to pre-qualify them as to how much they can borrow. Okay, so we're going to talk about the asset business description. Do you know, I'm assuming you don't really know anything about the property right now or what the condition of the property is or the roof and things like that. So,
Yeah, I'm not quite sure yet.
yeah, okay. Let's just, obviously continue to get you in front of the broker so we can find you a property. Just to figure, because I'm going to need to know things like how old are the building and is the property might have any risks in there. Do you know about how much square footage you think you might need at all to buy?
Yeah, so we're looking at about 10,000 square feet on 2 acres.
Okay, got it. And basically you're going to need about how much clear height, do you need?
We're thinking about 25 feet would suit and 5 roll-up doors.
Okay, great. And do you have any idea how many jobs will be created by the loan?
We anticipate about 10 jobs.
Oh, great. Congrats.
Thank you.
It's awesome. How long have you been in business?
So we've been in business for about 15 years. So we've been kind of growing ever since, and it's been really successful since year one.
That's great. Is this a franchise or a private startup or anything like that?
It is a private business.
Okay, great. And how many employees do you currently have?
We have 10 full-time and 10 part-time.
Got it. And do you have any business affiliates, like other businesses that are tied to the existing business somehow or intertwined?
Yes, I do have one other affiliate. We own 25%. It's another company that sells another product type through the auto industry.
Okay, great. Yeah, we'll just need to get copies of the tax returns for that as well. Is the business cyclical, or not?
Nope, it is not.
Okay, great. So back to the listener. So again, if you're dealing with a business startup, I'm not saying that this is, but you're going to need to ask things like, why did they make the decision to start the business? And have they ever written a business plan? You'll want to get a hold of this. What exactly are they selling? And how will they generate revenue? Who's their competition? Understand the description of the business products and services. What unique skills do they possess to operate the business and make it successful? What is their source of down payment? How many jobs will they create, which is what we asked. Is if it's a franchise or a startup, you're going to need to figure out how many locations the franchise has, how long it's been around, if it's SBA eligible, and do they have a copy of the franchise agreement? And if so, get a copy of it. So we'll continue back talking about the asset, kind of the business at this point. So, tell me a little bit about your business.
Yeah, so we are in the auto parts selling business. We focus on Toyota and Nissan parts. We sell to individuals and we wholesale to other businesses.
Great. Basically, are you, I guess I think you'll obviously said you're going to be doing a build out on the property. So that's good. Do you do any other industries at all, or is it just those two?
It's primarily those two.
Okay,
Yeah.
great. So just back, note here. So remember to pay close attention to the industry. So some industries are riskier than others. When you deal with auto related, they're going to want to press into environmental issues that they might have, like oil or chemicals on the site. You got to press into that real quick because there could be issues like leaking oil. If it's restaurant related, you want to discuss how their tax returns look. It is not uncommon to show losses because it's very cash oriented business. So you'll want to cut this off real fast by asking to get a copy of their tax returns. If it's hotels or motels are known for being risky, they're cyclical. You want to press into the financials and rolling occupancy reports. If it's medical related, you want to understand the nature of their collection ability for cash flow. A lot of medical businesses are run by the insurance companies and they're notorious for slow paying. So lenders love medical professionals though. They enjoy them. Financial professionals, attorneys, financial planners, insurance agents, accountants are considered low risk and lenders love them. So we'll go back and talk about the collateral to be in place. So we kind of talked about the 7A with respect to the collateral. And is there any questions about that at all? Did that make sense to you?
It definitely did make more sense. Thanks for explaining.
Okay, that's great. And so you really just have this choice to make between the two. Is there anyone that in particular you might be leaning towards?
I'm kind of leaning towards the 504 because I was a little nervous about the lien on my house. So if it's possible to get around that, I'd always prefer that option.
That makes total sense. Yeah, rates, just so you know, it depends on credit, cash flow, all the other factors, but running about 4.5% to 6% right now. And just based on the calculation, I'm thinking $35,000 to $40,000 in fees that we're thinking. And the 504 has a kind of a 10-9-8-7-6-5-4-3-2-1 prepay, just so you know, and then they'll lock the rate at the time that the CDC kicks in. Okay, so that rate isn't going to be right out of the gate. It might take 90 days. If you have construction, it could take longer.
So you're telling me that if the rates go up after we close, I might not get the earlier rate that was lower.
That's correct.
Do you know how often those rates change?
I'd say on a weekly basis, but I think you need to understand that the debenture rate on the 504 is tremendously lower than most of the market. So even if it makes a movement, it's still going to be a lot lower than the market. So I still think you'll be okay because it's fixed for 20 to 25 years.
I see.
And no other bank's going to fix the loan for, 20 years.
I see.
Yeah.
Thanks for clarifying.
Yeah. So I think you'll be okay, but it just depends completely on you. But I would recommend just giving this, you probably go the 504 route.
Great.
Okay. Thank you. So just a note to you, listeners. So great. It's a great opportunity to emphasize the loan to value, walk them through programs. You just got to be super clear, especially with small businesses and SBA about, the liens for 7A, that they take a lien on someone's homes. That can make someone really nervous. A lot of times lenders don't talk about that till the end and they feel like it's a bait and switch. So you just need to be real careful about that. Just understand some of the other nuances so that they understand what they're getting into. So we're going to talk about, typically we'll be talking about property location. In this case, they don't really know, but, he doesn't really know where he's going to be. But you want to get some idea of the general location where they want to be. If you do, you want to know that location. You want to know if there's good traffic or not, or if it's pulled off the street. You want to get some idea of the general area to see if it's, there's any risks of being down there at all from the lender's perspective. So just, understand the market area that they're in and do just a little bit of research as well. Here's a couple things just to know. The properties in a major metropolitan city or suburban area or rural, lenders can see properties as riskier in smaller markets. Okay. Traffic count, that goes across the property. If it's a retail center, some areas thrive with the traffic. like retail centers, car washes, gas stations need it. What's right around the property that either supports or hinders it? Are there schools, shopping centers, freeways, supporting businesses, and the like? You're trying to make the argument the location is strategic and it'll be a good long-term risk. So you make sure you get as much detail as possible about the surrounding area to make the best case. So we'll go through a little bit of cash flow now with the client. So would you mind telling me about the business did in the last fiscal year in terms of net income at all?
I don't know for sure. I think we made $1 million.
Okay. So I just want to make sure I'm clear on this too, to make sure we're talking about the net after all the expenses. Is that still $1 million net?
My apologies. It is 250,000, I believe.
Okay, great. Thanks for sharing that. So how about you personally? How much, did you make an income?
So I take a draw of 100,000 and salary of around 75,000
Okay.
annually.
Got it. Okay. Um, do you have any business debts? And if so, how much do you pay kind of monthly in payments?
We have about $450,000 in equipment loans, and our payment, I believe, is around 3,500 a month.
Perfect. How about personal debts? Do you have any mortgages, auto loans, credit cards, and what are those payment amounts?
I have a mortgage for 345,000, and I paid 2,200 a month, and an auto loan for 30,000. I paid 1,500 a month.
Thank you. Are you planning on moving out of the property you're renting right now and into the new building when you close? And if so, how much do you pay in rent right now?
Yes, we are planning on moving out, and we're paying 50,000 a year in rent.
Perfect. Thank you so much. Okay, so back to you, listener. A lot of times the clients will not know this stuff off the top of their head. They might not know any of the numbers. So we want to get the documents, obviously. So you can quickly run some cash flow numbers based on the potential new loan. If you recollect, you can run a debt payment on amortization of 80%, on a conventional 90% on SBA. Use a market rate to get the annual payment. From here, you're going to go ahead and calculate the primary debt service coverage ratio. Do need to exceed 1.20. And if you don't, it's a great time, obviously, to discuss the challenge and then collect the tax returns so you can dive in. So let's talk about urgency here now. Obviously, you're not under contract yet. Why are you moving out of your existing location?
So we have a contract out, but we're not under contract yet.
Okay, got it. That makes sense. And so you're leaving this location because.
So we're running out of room and can't grow unless we have that extra space.
Okay, that's great. You got to grow. So that
Yep.
makes total sense to me. As I mentioned before to the listener, so, you're looking if they're under contract, you think about under contract, urgent, 1031 exchange, urgent. If it's out for signature, that's positive too. If they're not under contract, obviously don't have as much urgency. If they're in refinancing mode, you're looking for major discrepancies on the interest rate, or if there's less than 6 months to go on their loan, that creates urgency. Otherwise, it's tough unless they really need some sort of cash amount. And so you want to look for those things. Development and construction, you're just looking for deadlines, timelines to make a big difference. So let's talk about their credit situation now. How's your credit? I mean, bankruptcy, foreclosure, short sell, criminal activities, any lawsuits or anything?
Well, I did actually have a bankruptcy 10 years ago.
Okay, got it. Totally understand. Happens to a lot of people. So thank you for telling me. Would you mind me asking, if this was like a full write-off or did you like renegotiate?
It was a Chapter 7 and we wrote everything off.
Got it. Okay, thank you. Do you mind sharing with me kind of what happened or?
Yeah, we ran into financial trouble in 2008 during the crisis then and tried everything to turn things around. We just weren't able to, so we had to wipe it all out.
Yeah, that was a tough time.
Yeah.
Thank you. Would you mind putting together like a half a page sheet explaining what happened, when it happened, why it happened, and why it won't happen again. And this will help the lender just get comfortable with your story to mitigate the risk.
Sure, I'd be happy to do it.
Okay, great. Again, back to the listener. If the client has any credit issues, the remedy is to have them write a one-page letter. Again, what happened, when it happened, why it happened, and why it won't happen again. Furthermore, you'll need them to give verifying information that supports the claims, legal paperwork and documents in total. Especially with SBA, you have to jump through some hoops to go to Washington, D.C. and get some sign off, but that could take weeks. So you want to start pretty early in the process. So we're going to talk about credibility. Would you mind sharing your background in this space so that I can substantiate your expertise in the business at all?
Sure. I've been doing auto parts for the last 25 years. I started this company about 10 years ago.
That's great. Can you get me a copy of your resume and just make sure you put everything into it, all the accomplished periods?
Of course, no problem.
That's great. So just notes here again, credibility is someone's competency. I mean, that's what you're looking for, is if they have the skills to pull something off. In this case, the lender's going to want to see experience or equivalency experience, and a few factors help offset this. If they don't have the direct experience, they could have a really strong financial statement with liquidity. They might have partnered with somebody that has the experience, or someone has like kind experience in the industry that's transferable. So just really pay attention to that when you're dealing with these clients. Okay, we're going to talk about compensation. Are you familiar with how we're compensated?
I'm not.
Okay, so we're a success fee firm. We charge 1% of the loan amount with a minimum of $10,000 in fee. And so we're compensated for identifying the lender, walking through the whole process, and consulting you along the way. And our role is to best represent you to assure that you have a proactive experience. Typically paid through escrow. If it's a 7A, we have to get paid outside of escrow just for regulatory purposes. And the fee is going to be paid by you and not built into the loan.
Got it. So it's 1% of the loan, not the price of the acquisition.
That's correct.
Okay, thank you.
Got it. Are you okay with that?
It seems high. Why should I do this?
Yeah, I totally get it. I mean, people ask that all the time, and I would too. I see where you're coming from, but the reason is this: we are extremely proactive in walking you through the process. This is your first time doing this, right?
Mm-hmm.
So autos really well, and this is what we do. This is our craft, right? So we know who we're supposed to talk to, the perfect amount of lenders that we can take this to get you the best deal, and then just walking you through the nuances of all the things that are involved. And then we're just responsive, and we really share your best interest in mind.
That makes sense. I appreciate that.
Great. Okay, so just back to listener, it's a tough discussion. Nobody wants to talk about money, but again, we have to have the conversation up front and to find out if you're dealing with somebody who's reasonable. That's the question. Not that negotiation's bad, it's not, but are you dealing with somebody who is reasonable? Because if they're not, that's time to probably wrap it up. Okay, so let's talk about expectations. Tell me sort of what you're thinking you need to get.
Yeah, so I need a rate of 3%, and I've heard other lenders say this.
Yeah, I understand. I completely understand. We just want to be realistic about what we can and can't achieve. And we're going to stretch. We want to get you the best rate possible as we can. So, yeah.
Well, thanks. And also, I really need to have it 95% loan to value. Is this going to be possible for you?
Again, makes sense. You want higher leverage. Given what we see, it seems to be a little bit of a challenge to get 95% loan to value. We do have some products that go to 100%, but they really need extremely good cash flow, and the pricing is not as attractive.
Okay, thank you. Well, we need to close in 45 days from now.
Understood. It's getting tougher in this market because there's so much competition. Unfortunately, we know that with the SBA loan, it takes a lot more than 45 days. So I think we're going to need to address this right now. Would you like me to talk to the commercial broker at all?
Yes, please.
Okay, great. So again, just back to the listener, we're hitting all these different scenarios because they come up from time to time. Just you've got to set the expectation on what is acceptable, what's not, what's going to work, what's not. Many times you might have to get back to them to answer that question when all is said and done. Okay, we're going to talk about recourse now. Are you aware what we mean when you say you have to sign a personal guarantee?
No, can you please elaborate?
Yeah. So when you sign a guarantee, you're giving the lender the right to pursue you personally if you ever default on the loan. Typically, anyone that has 20% or more ownership in the business, they got to sign. This includes any and all spouses, unless you have a prenuptial agreement, or they sign a spousal waiver document. Let's say that you default on your loan. The first course of action is the lender's going to want to work with you, just get it back up and operable. If it doesn't work, they're going to pursue legal action where they're going to go through a process of foreclosing on the assets and then liquidating. So they'll liquidate everything. If they can pay the loan back, then it's going to be on your credit, but they're not going to come after you. If they can't pay it back, then they're going to come after you for the difference in any additional fees. And then if they can't get that, and you do owe them, they could file a judgment deficiency ultimately. So again, that's why it's really important to understand whether you have, prenuptial agreement or not. So does that make sense?
That definitely makes sense.
Okay, great. So back to the listener. Again, personal recourse, especially for small business owners, a lot of times they don't really fully understand what's going on. And so you really want to communicate with them, because it's extremely rare if you could ever get a non-recourse loan for an owner occupied, and let alone SBA. It just, in fact, I'd almost say it's impossible to get it for SBA. So, okay, we're going to vet out the client loyalty for a second here. Who else are you talking to right now who might be helping you obtain the loan?
I'm actually talking to our existing bank.
Oh, that's great. Is there any reason why you don't just want to go with them?
Well, it's because I'm trying to get the best terms for the loan, so I'm looking to see who can offer us those options.
I completely understand. Do you know what other lenders have offered yet? I just want to make sure that we can best serve you and be competitive.
Yeah, they said they could do a 10-year fixed rate at 4.5% with a 25-year amortization.
Great. Thank you. That's really helpful. Are you open to working with us exclusively to represent you outside the lender that you're already with?
What exactly does that mean?
So it means that we work diligently to get you the best terms and meet your goals, that will represent you through the whole process, and that we assure your best interests. Basically, you're giving us exclusive opportunity to represent you for 90 days.
Okay, makes sense. I'm open to it.
Okay, great. Okay, back to the listener. So the key is to look for clients who are open to giving you a viable opportunity. You want to refrain from someone that's an incessant shopper. You also want to stay away from someone who isn't going to be transparent about the process. If they have another broker, you want to have them agree to have everyone register names of lenders they are using. This will allow you to shop and know you have the best opportunity to win. Please note there will be times they will not disclose other terms to you. This will be a judgment call if you want to proceed or not with working with a quote. Make sure when a client gives you terms that you clarify it is fixed or not when you receive it. So now we're going to talk about client net worth. Do you mind me asking what your net worth is?
What exactly is that?
It's a great question. Most people don't know. Your net worth is all basically your personal assets minus all your personal debts. So it's the equity that you have in your properties and assets after all the liabilities. They sum up all your real estate, cash, cars, etc., minus the mortgages, loans, credit cards. Does that make sense?
Yeah, that does make sense. I'm guessing, but I believe it's about 650,000, give or take.
Okay. And then how about cash? How much cash do you have, and where's the down payment going to come from?
I think I have about 300,000, and that's where I'm getting the cash.
Great. Okay, just back to the listener. So you're going to want to ask about cash and net worth. And again, you're dealing with a small business owner. It's not as big of a deal. So I wouldn't worry too much about it, but you do want to look at cash because that's going to be viable. In terms of the collateral, because that's usually the next section, You're going to be asking about the collateral itself, what it's worth. He's not going to know that right now, but it's very, critical that you get comps, that you talk to the broker to get sales comps. You must determine what you think the valuation is for a property. Even if it's construction, it's even just that much more significant, because you could get into a situation where the lender comes back and says, hey, appraisal didn't come in, and so you just want to have that conversation up front. The other thing is we're going to talk about phase one. Do you have any idea of the property you're looking at, if they ever had a phase one on it?
I'm not sure.
Yeah, that's not a problem at all. We're just going to have to order that report.
So what exactly is it?
Great question. So a phase report is a third-party report performed by an environmental engineer. They'll pull a report showing the history of the property and what it's been. It's looking to see the uses of the property and any causes for concerns. Contaminated groundwater, underground storage tanks for gas. If for some reason they find anything, they might recommend a phase two, which is where they actually bore into the ground to identify any contaminants.
How much does that usually cost?
Usually about $1,800 to $3,000. It can be done in around 2 weeks.
All right, that makes sense.
And again, just to the listener, note that this will be a critical portion of the success as well. So you want to know that for this. So we're going to I'll just walk you guys through a little bit of construction questions, just because the scenario is a little bit different. So you're going to want to know if they already own the land. They don't in this situation. They might say yes, and then you'll want to know how much did they pay for it. Okay, assume they paid $500,000 for it. You want to know how much they spent in total. So they might say, hey, $50,000 in fees and some other things. You want to know the zoning and if there's any rezoning that needs to take place, and walk them through that. You want to know if there's any issues with the property, deed restrictions, encroachments, or easements. You'll want to know if there's been work that's been done and if this is cleared with the local title company so they don't have a broken priority. You'll want the title company to say if there's anything been done to the site to get the waivers. You want to know if there's any grading issues on the site, if they have any historical or natural preservations. You want to know if there's anything been donated by the government. If they've picked out a contractor, you definitely want them to go through that process. And then who will be handling any operating shortfalls. In a small business deal, it's just going to get baked into the loan, so that's fine. And then when it's all completed, that they'll be open to operate. So have them get a construction budget if they don't have one, and find out what the original uses of the property was. How far they are with development, entitlement, approvals, drawings, plans, engineering. Is there any improvements or utilities stubbed up to the site? What's the water situation? And if there's been any reports, ALTA, environmental, geotech. So these are all seem a little overwhelming, but if you get construction, this is critical for you to have success. So so don't skimp on the construction questions. So for personal questions, is everybody a citizen?
Yep, we're all citizens.
Are you married, and do you realize your spouse has to sign loan documents?
I'm actually going through a divorce.
Oh, sorry about that. We're going to need some of the details though, just because your spouse might have to sign loan documents. And I'm sorry about that, but where are you at in the process?
So we're almost complete. Everything is finalized.
Do you have any idea what the financial consequence will be?
So I have to pay $100,000 over 5 years.
Okay, got it. Can you get me a copy of the final divorce decree? Because we're going to need to factor this into the cash flow.
Yeah, of course.
Okay. Have you ever defaulted on any federal debt in the past? And if so, this could be a problem for someone getting an SBA loan.
Nope.
Okay. Do you have a trust, and will it, if so, act as a guarantor?
Yep, that's fine.
Okay. Obviously, I know it's kind of silly, but you imagine you're coherent to sign the loan documents, right?
Yes.
Okay. And any back taxes?
No back
Okay.
taxes.
All right. Well, thank you for your time. I'm going to go ahead and send you a list of things today. And thank you again for taking the time, John. It was a pleasure to get to know you.
Thanks, Dave.